Triffin's paradox or Triffin's dilemma was that you cannot have a national currency like the US dollar become an international currency when it is tethered to gold, because the needs of the global economy will always require more money to flow outside that will then be converted to the national gold reserves and deprive the US of its gold reserves. Everybody will convert into gold, and then gold will leave the US, and then the dollar will be unbacked by gold, and the whole thing will fall apart.
Basically,
And
because there's more money in circulation outside of the country, and if those countries demand to exchange dollars for gold, then you bleed gold and you're screwed.
that's exactly what happened thanks to Charles de Gaulle and France, who converted tons of US dollars for US gold. So in the 1950s, you saw a huge amount of gold outflow from the US. And what Robert Triffin said is, what the hell do we do now? And that's when the Eurodollar bankers stepped in and said, let's just untether from gold and physical currency what's at all. Let's use a fictional ghost money, a fictional US dollar, and we'll just transaction ledgers that aren't convertible into anything. And because we're a bunch of global banks, we can transact across borders without any problem. There's other factors involved, including the unique circumstances of the City of London, where if you set up a bank, and I mean the City of London as the ancient city that's actually a very different political entity. Um, if you set up a bank in the City of London, they basically say you can do whatever the hell you want. There's no regulations as long as you don't deal with UK citizens. So it basically became like Singapore or the Cayman Islands, where it was a bank haven where banks could do all of this money experimentation centered largely in London. But there's this confluence of all of these needs and desires and capabilities all at the same time. The Bretton Woods system started to break down because, as you pointed out, gold started to flow to France, and the U.S. was starting to lose all of its gold reserves. At the same time, the world was globalizing, which meant we needed more dollars. We needed a dynamic medium to facilitate that trade, not just in merchandise flow, but also financial flows all throughout the world, so that Japan could buy goods from Sweden and do it in very seamless and integrated and efficient fashion. So we had this Eurodollar capability arrive on the scene right at the right moment in time that took advantage of not only that need, but also the rise in telecommunications technology. So now that we could settle on, we could integrate our ledgers at the speed of light. We don't have to wait for, mail to be, or a check to be mailed from one side of the world to the other. We actually were, the Eurodollars banks were using telex machines from as far back as the 1930s. So, telecommunications innovations, you got computer systems that can process all of these book entries faster and faster and faster and bigger volumes. So you have all of these things happening at the same time, which created this Eurodollar system, which looks nothing like a currency or money. It's basically a computer network. So it's just ones and zeros on a whole bunch of computer screens.
But it seems then that the US government who's issuing all of these dollars is tremendously over leveraged.
It's not the U.S. government issuing the dollars. See, most of what you hear in economics textbooks is also sorely outdated. Okay. When you talk about a bank or money, most people think it's a physical form of cash, right? It's something that the government printed. But as we keep saying, that's on a ledger basis, there's actually no physical cash. There's really never been physical cash in the Eurodollar system. So the government doesn't print the money that goes into the system. The banks are the creators of the liabilities. So it's a form of bank money. So it's called US dollar. It's denominated in US dollar, but there are no US dollars. These are all bank dollars. That's a huge important distinction.
But okay, so even the federal the bank in question here would be the Federal Reserve that's issuing this, or it's just
Federal
individual banks?
Reserve isn't an international central bank. It's not even it's not a domestic central bank. So what we have is basically a large cartel of global banks who have been running the US dollar, what's called the US dollar, for about three-quarters of a century.
Yeah, what
And
does
see,
it
when you
look
say
like?
that, people are like, no, this is not true. There's no way that's possible. You're freaking crazy. This is a conspiracy theory.
Okay, but so do they just
Yeah,
create the dollars out of thin air? Like the bank in England is just one day like, okay, we're gonna add $1 billion of US to our
Yep.
balances, and then we can spend that
based
and
on
exchange.
probably based on assessing whether somebody's good for it or not, based on the
That's
services.
it.
And yeah,
It
so they
sounds like it's theoretically unlimited, right? If you have the ability as a member of this banking cartel to just create money out of thin air, why don't you just create money out of thin air? Why don't you just create it forever, right?
and
Well,
give
because
me some.
there are practical limitations, and you're right.
Okay.
Part of it is you are essentially creating a claim on somebody else. And you're creating a claim on somebody else that has to be paid back at some point in the future. And if that person doesn't pay you back in another claim on another bank, the whole thing starts to fall apart, which is exactly what happened in 2007.
So if I'm a aircraft manufacturer, I go to the bank and I'm like, hey, I need a few $1 million to get this project off the ground. The bank can then create the $1 million essentially to loan in the
So
form of
I
a
write down
loan
in
to
my
me.
book that you now are credited with $1 million. So
And now there's $1 million that they're paying paychecks with and buying parts, and it's flooding into
you're
the
just
markets.
so you have a positive number on my balance sheet. So I have credited you with $1 million, and what I get as an asset is a loan. So I get a claim on your future cash flows, which I'm going to say I'm going to need that at certain intervals during the period. But yes, for the immediate purposes, I now have $1 million on my book that you can start writing checks against, or any type of want to issue paychecks, and I will deduct those numbers from this $1 million that I've created from you, and I will credit to whoever else. If it's the grocery store that has a different bank, I have to find a way to settle with the other bank, which usually means I have to create it. I just have to move some numbers around.
But
So
it's
it
a
does
genuine
become a
liability
complicated
in the
process.
first place, right? Like those banks could fail in principle, right? If you're not able
They
to pay
do.
them back. Yeah.
They absolutely do.
Well, they did. I mean, it seems like today something else is
Well,
happening.
there's a couple banks that failed recently.
It
Yeah, and
happens.
that's the bank failures are when you have to. There's so many of these payment demands. All I mean, it's just truly. We're talking about trillions of dollars a day that gets transacted through various financial utilities that have been set up again as a means to integrate all of these payment processes and ledgers together. Um, so yeah, there are times when you don't have loans that pay off, and if you don't have loans that pay off, then you already got outgoing cash that you need to credit to somebody else, and you don't have it coming in. Now you've got a problem. And when it becomes a big problem is you have these various utilities and custodians that act as sort of referees. So we have all these ledger balances going back and forth, and you have the ability to create money out of thin air. But at the end of the day, it's not the Fed. There are these various referees in the system that are basically sort of self-regulatory processes, where if you don't have enough of a positive balance on the referee's balance sheet, the referee can cut you off and say
Who are
you're
these
done.
people?
It depends on what type of thing we're talking about. But in the 2008 crisis, there's things called tri-party custodians, tri-party repo custodians, like J.P. Morgan. And this, I mean, I don't think we want to get into this right now.
Let's save that for next time.
Way
Yeah.
different, way down the rabbit hole.
Okay.
Okay, so this seems to me like a system that is akin to a shark that dies if it doesn't keep moving.
Yeah, but that's true of every economic system. That's not unique to the Eurodollar or the global system. That's just because we're constantly transacting in a highly specialized commercial economy. Money needs to flow with commerce. So that's just an inherent part of the commercial system. And the Eurodollar was actually really good at meeting that need. In fact, not just meeting the need, but exceeding it. That allowed it to proliferate and flourish all around the world. I'm not a proponent of the Eurodollar system. Let's make that clear. I'm not selling you on the Eurodollar system. I'm trying to tell you what actually happened. But there is no denying that in that period, especially after the great inflation, the great so-called moderation, we went through a period of unparalleled prosperity in more places around the world than had ever been imagined before. There was so much good that came out of this, but there are also, a lot of bad things that happened too. So, yeah, I mean, it's troubling in one sense to know that the U.S. dollar, the monetary system, the entire world the entire world operates in is the responsibility of a global banking cartel. It really should make people uncomfortable, because that also leads to other questions outside of the economic realm. We're talking about political power and everything like that. But when it works exceptionally well.
Oh, go ahead.
Well, I was going to say, I think that the troubling part of it is that it's not really part of this democratic dream that we all operate under.
And that's, I mean, commercial free market systems, this is what the commercial free market chose to do. And I think it makes us uncomfortable, but we also have to keep in mind that the global banking system was probably the only way to have done it. At the time, given the limited technology, the limited, evolutionary processes and everything else, the way that banking developed and the way money developed into a ledger money system, it was the natural next step. So even though it was, it wasn't maybe ideal, it might have been the only way that was possible. And so the banks provided a tremendous service to the world at their, their own benefit. They certainly took their more than their share. But at the time, I think it was the only way to do this, to take that evolutionary step. And they created the background conditions that allowed all of this to happen. But technology has progressed, our knowledge has progressed, blockchain technology, we don't need the banks anymore. We can do the same type of Eurodollar type of processes, dynamic, flexible, virtual currencies, ledger money, without the banks.
Mm.